All right. Hey, everyone. Hold on a second. Let me adjust this. Get this thing working right. All right. Hey, welcome. Thank you for joining me for the monthly student meeting for May, May of 2024. I'm Mark P. Markets, in case you don't know. And let me explain to you how this works real quick. So each month I do a student meeting. Now, I've made this an open house again, so that people that are available right now, they can check this out and see the kind of things that we teach and the things that we go through here, so they can get a sense of the type of value that I provide. And the benefit to being a member, though, is you'll be able to watch this back at your convenience, because right now on the YouTube channel, right, I have the previous monthly meeting, which you can watch on there. But from now on, what I'm going to do is I'm going to hide these meetings on the YouTube channel, but they'll be available in the student meeting archive, okay? So, and that's in the Discord community. Members will be able to go back at their convenience and watch the meetings in there. I mean, we have there's like 14 or 15 of them, something like that, in there right now from over the previous year. But that's where I'm going to continue these, and that's how I'm going to do it, okay? So as a TradeScanner Pro member, you will have access to those at your convenience. Okay, so before we get started real quick, so what we're going to do in this stream today is we're going to talk about Bitcoin, but we're going to talk about how to use the TradeScanner Pro specifically with a specific type of context, okay? Context is a very vague term, and we're going to be very specific about that. We're going to talk about how to use TradeScanner Pro with multi-time frame support and resistance levels. All right, so that's where we're going to go with this today. And maybe if we have some time, perhaps we could find a trade or two. All right, so with that said, let's get started. Let me just pull up my special slide here so we can begin. All right, so this is for educational purposes only. For investment advice, please consult a licensed investment advisor. All right, I assume you guys can hear me. All right, I'm just gonna say hello real quick. Got Stian. All right, hi Stian. We got Van. Good to see you. We got Monica. Good to see you. Isaac, Samuel. How are you? Okay, cool. Oh yeah, Samuel. Okay, Samuel. Yeah, sure. I remember you. I remember the invite that I sent you. Sure, welcome. All right, one of our new people, Giovanni. Good to see you. Okay, cool. So I'm glad you guys are here, because again, we're going to go over some important things. You see, people that sign up for the TradeScanner, when you lack experience, it's very easy to get caught up into this idea that it's some kind of magical thing that's just going to magically make you money. Nothing like that exists, okay? Especially at the retail level. I would say at best, if you're taking just random signals without doing any context evaluation, I would say the win rate is probably 50% most of the time. That's random. People want to hear, oh, 99% win rate, I'm going to be a billionaire tomorrow. That's what people want to hear, right? Well, that's not what you get here. What you get here is reality. So there is a way to improve the probability of the signals, and that is what context is all about. So I'm going to show you that here, okay? Specifically using support and resistance levels. Now, let me make the chart bigger. Okay, hold on a second here. All right. Oh, yeah, and by the way, before I get into the session here, people that are on the YouTube channel, you probably aren't able to ask questions and stuff, because I'm running like a webinar channel thing in here, like a webinar room. And the people that are in the webinar room are the ones that I can see. If you're on, oh, actually, no, I see, you know what? A bunch of you guys are on YouTube. Okay, never mind. All right, I don't even know how this thing works. All right, I see you guys. All right, so what I was going to say is make sure to check the links in the description. Also, press the like button, press the subscribe button on the YouTube channel if you have not done that, because that helps us out as well. That helps me out. Now, I want to point out a couple of things in the description. Please take a moment to check some of these links out. Okay, you'll notice at the bottom there are some links for wallets, okay? Polygon and Ethereum. Those are donation links, okay? If you want to support the community, or you're feeling generous, or you want to whatever, if you would like to help out, you can donate whatever you'd like to donate to one of those links, and that goes to Stian, okay? It doesn't go to me. I don't get a cut or anything like that. That goes straight to him, because he has done immense work for the community, and he continues to do work on his own time, a lot of it. Like, for example, I don't know how many of you have seen the free script, but we have this free script, right, where it's a trade exit calculator. He took this ATR situation, okay, where it generates the signals. I don't have an example on here where it generates the signals or the trades, the exit suggestions, and he made a free script out of it. That was on his own. He sent me the script. I put it up on my profile, and that's now available for the community to consume and use and benefit from. So again, if you'd like to help the guy out or show some thanks or show some appreciation, consider those links. Okay. Also, if you're interested in a TradingView subscription, there's an affiliate link for that as well. Okay. That's his affiliate link. He gets the cut of that. TradingView subscriptions are not required for TradeScanner Pro, but there are benefits to having the TradingView subscription, like more notifications that you could set up and things like that. There's a whole host of benefits to doing something like that, but it's not a requirement. Okay. Also, if you're interested in exchange like Bybit or MEXC, right? That's for non-US users. You can consider one of those affiliate links as well, and Steen gets a cut of that as well. Okay. So again, if you want to, however you want to show him some appreciation, he would appreciate it. And again, thank you, Steen, for all the great work that you do. Now, if most of you're in the Discord community, I have to mention that. So I don't have to mention any other ones, but people that are watching that may be not a student or not familiar with the community, there is a Discord community. There's a lot of activity there and a lot of good place to ask questions. Alex does a great job moderating the free channel there. So there's stuff there. There are also premium channels, which not all the permissions are set up, but they will be soon. Just we can only do one thing at a time. And then all TradeScanner members and all the other members will be able to see more parts of the server. Right now, some of that is not available to all you guys, but don't worry, it's coming. Okay, so check that out. Also, if you want to get sample trades, one every week, right? Cryptocurrencies, Forex, or stock, the TradeScanner bot, which TradeScanner Pro is based upon, sends out a signal every week, and it rotates the market each week. So you could sign up for that by email, and you'll get an email. Other than that, if you're new, check out the TradeScanner Pro 14-day free trial. I'll talk more about that as we get along here. All right, so let's get started. So real quick, now I have the Bitcoin spot market here. This is my TradingView analysis typically, right? This over here. And what I want to talk about first real quick is how we get into multi-time frame support and resistance. Now, before we can get into context, right? Like I said, context is a general term. It can mean a lot of things. And what I like to think of context as meaning is basically information or clues or variables that are not in front of us at the moment, and we have to seek elsewhere. Okay, that's what I like to think of context. And context comes in many forms. The more experience you get, the more you'll recognize what context is relevant and what is not. So to give you some examples, context like volume, right? Volume is a form of context. Seasonal volume. What is seasonal volume? Well, certain times of the year, volume is not the same compared to other times of the year. Like, so for example, the second week of January to about the second week of May, right? We just came out of that, is usually where you get like peak volume for the year, okay? Which usually peaks somewhere in April, okay? After the second week of May, volume begins to taper. It begins to taper off, and it's a slow process. It's not like switching a light bulb on and off. It takes time, and the volume shrinks and shrinks and shrinks, and usually finds its bottom the second or third week of August, okay, or the third and fourth week of August. So we're now in an environment where volume becomes less and less and less slowly. And that's meaningful. That's a meaningful piece of context, specifically if you're a day trader, because lower volume means lower momentum. And the TradeScanner Pro needs momentum in order for trades to have a higher probability of success, right? So that's one form of context. Context could come in intraday volume patterns, right? The open of the stock market, 9:30 a.m. Eastern time, volume between that time and like 10:30 is going to be greater than volume at noon, okay? That's just a typical pattern. All right, now, so when it comes to multi-time frame analysis, right? Multi-time frame analysis for support and resistance. Oh, hold on, I'm just looking at the questions here. Yeah, well, Sam, MEXC is not for non-US. If you're based in, I believe you're based. Oh no, wait, are you based in the US? I can't remember. I think you're in Texas, aren't you? You're in Texas. Well, all right, boy. I love Texas. MEXC, I don't. I believe MEXC is only for non-US. All those exchanges are non-US. Okay. Yeah, I've been to Dallas, Fort Worth. I love Dallas. Have you? No, ZoomX. No, I'm not familiar with. Oh, but VPN, Sam. Yeah, sure. If you want to jump through those hoops, it's possible. I don't know. I don't know what their story is as far as KYC. I don't know. I don't use MEXC, so I don't know. Maybe Steen can answer that question, but you may have to look that up. Okay. So anyway, all right. So let me just move along, guys. If you have questions, feel free to ask in the channel. And I'll try to address questions as I go here. So multi-time frame analysis means what it sounds like. We start with larger time frames. Now, before I get into the analysis itself, I want to mention one thing. You must understand, or you must know what type of trader you want to be before you do anything else. You must know this in advance before you even look at a chart. So you must be able to answer this question. Are you a day trader? Are you a swing trader? Are you a position trader, right? What is your intent? If you're a beginner, meaning you've only been doing this like a month, then I suggest you start out as a swing trader and work on time frames like 15-minute, 30-minute, hourly, 4-hour. Those are more appropriate because the frequency of signals is going to be lower and the quality of the signals tends to be a little higher, okay? You're not going to have there's going to be a lot less noise is what the point. If you have more experience, meaning you've been doing this maybe almost a year or something like that, and you have a general idea of support and resistance and trend and things like that, well, then smaller time frames like 1 minute, 3 minute, 5 minute, something like that, or sub 1 minute are more appropriate for day trades. Okay. But again, you have to decide what you want to be. And then from there, then you could move forward into what kind of context is going to be meaningful for you. Okay. Hey, Alex, between day and swing. Okay. That's a good question, Samuel. I'm going to answer that real quick. This is a good question. So day trade basically means you're in and out the same day. It could mean that you're in and out in a couple of minutes. It could mean that you buy it and you hold it for an hour and you're out the same day. But a day trade means you're in and out the same day. You do not hold overnight. Okay, that's a day trade. And the magnitude of moves on the day trade time frames obviously is going to be smaller. So your risk is going to be smaller. Your stop loss amounts are going to be smaller. Your take profits are going to be smaller. And the Trade Scanner Pro accounts for that. Right. So if you take a trade on a 1 minute chart, the order suggestions that it shows you are based on 1 minute movement. Okay. Compared to if you take a trade on a daily chart, right? The daily chart for Bitcoin, right? I have the trade scanner on here. If you look at the daily chart, look at this. This is the trade scanner trade on the daily chart. This stop loss suggestion is like 8,000 points or something like that. That's a lot of points to risk. The entry was up in here, right? On May 2nd, the entry was here. Right. And this thing took a little pain. This is a couple of thousand points of pain in here. So that's the day trade. That's the swing trade or position trade magnitude. But the take profit was way up here. Okay. Which it almost reached, and it still may reach that. But anyway, that's the point. Compare this to a 1 minute chart. A 1 minute chart, you're never going to see 8,000 points of risk. On a 1 minute chart, you're more likely to see, 100 points of risk. 150 points of risk, something like that. Okay. So that's really like the key contrast between day trade and the swing trade. Swing trade just means you're in a trade for a longer duration, usually a couple of days to a couple of weeks. The Trade Scanner bot is a swing trade bot. It takes trades that are typically meant to hold on to for a couple of days that could go into a couple of weeks. Anything longer than that, then you're what's called a position trader, which is more like an investor. So those are the three categories that you should really be familiar with. And you have to pick one, especially in the beginning. Now, at some point, as you become more advanced, you can be all three at the same time. But if you don't have the experience, trying to do all three of those things at the same time can be extremely confusing, especially because of all the noise on the smaller time frames. So that's why you're better off starting off with slightly larger time frames. Okay, does that make sense? So I hope that answers your question. That's a very good question, and it's relevant to where I'm going with this. Okay, so in this situation, in this example, let's turn this off and let's move up to our double charts here. In this example, I want to talk about what you would do if you're using 15-minute charts. And then after that, we'll go to the small time frames, like 1-minute charts. So let's say you're a beginner, okay, and you're starting out and you're like, all right, so how do I get context? Well, context for day trades or swing trades basically refers to two things: trend and support and resistance levels. And out of those two, the support and resistance levels are probably going to be more important. Trend just kind of gives us a side to bet on. Like, so for example, we know that the bigger picture trend on Bitcoin is bullish, right? There's no question. The bigger picture trend has not changed for a very long time. That's the thing with larger time frames. Things don't change very often, but on small time frames, they change all the time. That's why it's harder. Now, the trend is bullish. So what that means is it's reasonable to bet that 70K resistance is likely to break. If I'm going to bet on a side, I'm going to bet on the side of the trend, or at least there's a higher probability that 70K breaks, because in bullish trends, resistances are more likely to break. Supports are more likely to hold. So, if I'm looking to buy, it'd be good if I can buy near some kind of support. All right. Now, supports and resistances have magnitudes. There are small ones, there are big ones, right? So there are more, like, I guess you could say there are minor ones and there are major ones. So like in the case of the larger time frame, right? The larger the time frame, the more weight the level carries. And usually a level is like a range of prices, right? It's not just one level. It's not just 70K. It's like 70K to 72K is the area, something like that, right? This is 70K up here. But like 68 to 70K, it's an area. That's very important, especially on the larger time frames. You can't pinpoint one particular price. Markets are messy, right? So my point is, if we're going to place a bet on the bigger picture, it's reasonable to expect 70K to break because we're in a bullish trend. That's the role trend plays. If we were in a bearish trend, then it would be reasonable for me to expect supports to break. So I shouldn't be going nuts buying at supports. I should be looking at resistance levels. I should be looking to take positions at resistance levels, because that's going to be more in my favor if the trend is determined as bearish. Okay. Now, so that's the general idea. So let's now go to a 15-minute chart. In fact, what I'll do is I'll use the spot market here because it doesn't matter. I'm going to use a 15-minute chart here. Okay. And actually, you know what? I should probably pull up a similar chart. Let's see. So I'm going to go to Bitcoin and I'm going to go to perp. Okay, hold on a second. Bitcoin, perp, because we don't need the spot market for this example. And plus I have all my lines all over the place and it could be confusing. So we'll go to Bitcoin perp, right? XC. Now this is the 15-minute chart of Bitcoin, right? It's the same chart as this one. Same as this one, except it's smaller, it's a larger time frame. So this is where we really begin with the time frame analysis. So what I'm going to do is we'll keep the trade scanner off on this chart because all we're looking for is context. Now, this is the 15-minute. In fact, let me switch the charts. I'm going to make this 15-minute. All right. And when we're dealing with a 15-minute, the whole point of multi-time frame support and resistance levels is to look at larger time frames and consider that as the levels. So if I'm working on a 15-minute, what is a larger time frame that I should look at? Let me let you guys answer this question. Right now, these are both 15-minute charts. I have to switch this one. I'm going to switch this chart to a larger time frame. This chart right here. Okay, I know the arrow is showing up on both of them. This chart over here. What time frame should I look at, do you think, to arrive at these multi-time frame support and resistance levels? 1 hour, 4 hours, Sam says. Hey, okay, another Samuel. Hey, Sam, that's my old Sam. How are you? Okay. Yes, 1 hour, 4 hour. So in this case, if our base time frame is 15-minute, then I'm going to switch my larger time frame to a 1 hour. Okay. Now, this starts to give me a little perspective here. That is the point of context. Now, you say, okay, well, where does trend fit into this? The trend on this time frame, on the 15-minute, it says it up here. Okay. And it's bullish. But this situation over here may not exactly be bullish. What does this time frame say? Let's say this one says bullish too. Okay, they say bullish, but they both say bullish. But it is possible to have one of these say bearish. The larger time frame is the one that you use as the point of reference. All right, so this is the time frame you're going to use. Now, let me just rewind a bit here. I forgot to mention something. For people that are brand new and be like, okay, what is he talking about? Let me explain to you how TradeScanner Pro works real quick and what it does. I'll explain this in 2 seconds. So it works in 3 steps, okay? First, it looks for trend. Then inside of that trend, it looks for a pullback. So let's assume that the trend is bullish, okay? It determines that the trend is bullish, and now we get a pullback on that bullish trend, which is here. It then looks for a change in momentum at this point. Once that change in momentum is confirmed, which usually looks something like this, it will generate order suggestions, right? Beginning with a stop loss, an entry, and a take profit. The ratio between these levels begins at 1.5 to 1. So it's automatically a 1.5 to 1 reward risk ratio. That is what the orders are generated at, the order suggestions. You can change that over here. I'll show that here soon, but that's the idea. Now, there's something called counter trend mode, and counter trend mode will ignore the trend and it will look for this setup over here. It'll look for the momentum reversal there, right? So counter trend mode is for more advanced traders. That's why I wanted to have a feature like that. That's really not a good idea for beginners, okay? Because you have to understand the signals, like I said earlier, are usually random. It means their outcome is, their win rate is typically 50%. Half of them are going to be wrong. Right? So what that means to you is you cannot take these signals blindly. It's not a good idea. I mean, you can, but you're going to have a lot of losing trades, especially on smaller time frames. I get these people who sign up for like whatever, and then they cancel like in the next hour. I'm like, why would this guy sign up and cancel in the next hour? Most likely it's because they thought they were getting into some kind of magical system, and then they realized there's no magic here, and they cancel. But they don't realize the value of this, the perspective that it provides, especially when you are using some form of context. So it's best to think of the TradeScanner Pro as a confirmation tool. That is the best way to think of it. It's not telling you the future. What it's doing is it's confirming a change in a location where you are anticipating the change to begin with. Okay? So good answers, you guys. So let's now go back to our 1 hour chart here because we're trying to find context. So this is where it gets simple. You don't have to have years of experience to do this part. You simply look for inflection points, right? So that's an inflection point, this level over here, is it not? What is that, 67, 183? Look how many times this thing bounced off this level. I mean, that's pretty common. That's pretty easy to see. In fact, I'm willing to bet that there were some other levels previously that were nearby. Yes, see that? It's not exact, but look at this. It's in the area, right? So that means there is some type of buying activity in this area. Okay, that's a level. That's context. Now, it doesn't mean that the level is guaranteed to hold. It's just a reference point. So for example, if I'm going to be going long, this would be a good area to be looking for long signals on the TradeScanner Pro on my 15-minute time frame. Even on my 1 minute time frame, but we're going to assume the 15-minute time frame. How this is helpful is I won't take, if I get early signals here, like in this area, they're going to be minor signals. Because yeah, sure, there's a minor resistance over here. This might be good for a 1 minute chart, but the probability that this thing is going to go back up here, like on that, from that 1 minute, is probably more like 50-50. There's 50% chance that it's going to work, 50% chance that it's not going to work. That's not exactly advantageous. So if I wanted probability more in my favor, I would be much more interested in signals in this area. So I identify the area and I simply wait. You can use the notifications, right, to set yourself up a notification so that when the signal goes off, you're aware of it. You can do that by setting it up like here. Now, keep in mind, these notifications for some people, they show up in real time. For other people, they don't. So we're still trying to figure out why that is. It may have something to do with their location. Okay. Some of these restricted countries, from what I understand, have delays in their, I don't know, in their data or their internet or something. I'm still trying to figure that one out. Anyway, so we're looking at our 1 hour chart. Okay. Oops, I don't want that there. Okay. We're looking at our 1 hour chart. We've identified basically a support. This line over here, I'm going to erase this line because for 15-minute purposes, it's not really relevant. Okay. It's in the middle of the range. This area here is going to be more useful for 1 minute, right? And we'll get to that in a moment. But for the 15-minute chart, I have a support. Now, resistance levels. There are a few on here, okay? What am I looking for? Again, I'm looking for turning points, right? A point where the market got up to a point and then has a pretty significant rejection, right? That's pretty significant. It pulled back somewhat off of there. This one is even more significant. Look at that, right? It touched and just completely collapsed. That is an inflection point, right? We can argue that this is too, but when they get close to each other like this, this is the same level, basically. There's no precision in this game. So, and when I see something like this, a high followed by a lower high, I like to basically consider that a range, right? So what I can do is I can take a rectangle tool and I can just draw like a little range on that and say, okay, that's my resistance range. And that's what I do in my bigger picture analysis. And I come up with these ranges, and that's where they come from, right? And these are, again, points of reference. They don't guarantee that the market will react in this way that I anticipate in the future. But if price action confirms there, then that's an increased probability that this thing is going to go the way I anticipate. Now, how far does it go is another story. There's no way to know. That's why the trade scanner provides a take profit suggestion with the trailing stop, because there's no way to know how far it's going to go. It may go to the take profit. It may almost get to the take profit. It may blow through the take profit, in which case the trailing stop kicks in, and now you have a point of reference to trail the trade, all right, and make more than the original reward risk. And the great thing about that is, over time, if you're winning more than the take profit because of the trailing stop, what's happening is your reward risk ratio is skewing in your favor, because the trailing stop, hopefully we'll get an example of it here. The trailing stop is always cutting your risk. It's always reducing your risk, right? If you respect these levels, if you respect the suggestions, if you just let it, if the trade closes and you're like, I'm just going to hold on to it anyway, you're asking for trouble. All right. So please make sure you respect the trade, the order suggestions, because that's risk management. This thing was built primarily for better risk management, not for buying a Ferrari tomorrow, which is what I'm sure if I said to everyone, if I had a picture, a thumbnail with like me in a Ferrari and be like, yeah, Trade Scanner Pro on the license plate, I'm sure I'd get like 1 million people signing up. Okay. But that would be false. And by the way, I'm a chartered market technician. I'm not allowed to do things like that. I have to follow a code of conduct, unlike all these other clowns out there. But anyway, you know what? I say that all the time. No one cares. No one cares that I'm a CMT. All right. So you got that. So we basically I know I'm speaking quickly here and I may be confusing some people. I hope I'm not. If you're confused, please let me know. But all right. I see a question from Samuel here. If you find a coin pumping straight up, do you wait for a pullback, or is there a way to figure it out? Okay, so that's a good question. There's no way to know if it's pumping. It's usually some kind of news driving it, some kind of nonsense somewhere, and you don't know how far that thing is going to go. Right? It's completely random. It may pop up 100 points. It may pop up only 50 points. It may run up 112 and then turn right around. Right? There's no way to know. So to play that game, first of all, if you're going to play that game, it's a hard game to play. You're going to have to use smaller time frames to try to catch some kind of pullback, because that's what the trade scanner looks for. You can also use fib extensions, right? The extension, the fib-based extension, to try to anticipate the inflection points at the highs. Like when you measure these 3 points like this, right? I measured A, B, C. And you get these inflection points, right? Like that projected the 1618, and that would have helped. That would have been a nice reference point to know, where you should be getting out of something or where this thing can potentially turn, right? Because that has to do, there's no magic here. That has to do with market proportions, right? Emotion expresses itself in geometric ways in the market. And that's where something like a proportional tool that measures market proportions can come in can be helpful for something like that. But again, there's no guarantee it's going to turn at the 1618. It's just a reference point, just like these support and resistance levels I'm showing you here from historical movements, right? These aren't fib levels. These are historical movements. These are places where price action occurred and may occur again. When you use a fib level, it's like a theoretical place where price might react. Because why? Because the whole world is looking at the same levels. The whole world is like doing the same things. So it's like a self-fulfilling prophecy. That's why that works like that. That's a phenomenon. That's how it's explained. All right, does that make sense? So I'm showing you basically, I drew these levels on this 1 hour chart. And as you can see, they appear on my 15-minute chart over here. So when you're working on your 15-minute chart, you now have some important points of reference. So if a signal were to pop up right now, I don't even have a warning. Okay, let me go to my Trade Scanner Pro, and I have my settings here. They're all set up. I'll explain them here in a minute, but I'm not getting any warning candles, right? Nothing. There's nothing here. There's no reason for me to do anything here. Okay, I shouldn't be going long. I shouldn't be going short. There's nothing here. On a 15-minute chart, trades can take a long time. I mean, look, here's some historical trades right here. Here's a short, which looks like it was worth a little something. Here's a short back here that looks like it got stopped out. Okay, these are 15 minutes. And these trades are hours apart, right? This trade to this trade is probably a few hours there. So trades aren't very frequent on the 15-minute. Does that make sense? So I'm showing you this because this is where you really should be starting out. Now, any questions before I get to the smaller time frames? Because this is where things get exciting, but also very confusing. I show many examples on previous streams, and people, you watch me lose money on paper because I'm taking these highly random trades, and a lot of times they don't work out, right? So sometimes they do, but it's random, and time of day has a lot to do with that. But we're going to see if hopefully we have some time today, and I'd like to see if we could find some trades, but context-based rather than me just taking, the random signals. All right, so any questions so far before I go to the smaller time frame? So what we've done here, just to recap real quick, is we used our larger time frame, the 1 hour, to determine these levels. Now I can also go to a 4 hour and just see, how is this relevant on a 4 hour? Oh, there's a signal on. Let me turn that signal off. Okay. How is this relevant to the 4 hour? The levels are pretty much the same as the 1 hour, right? The 1 hour and the 4 hour are very similar, but the 4 hour can give me even more signals, right? I mean, more levels. If I go like this far out, right, I can even get even further out and get some more context from that. But it's not necessary. If you're working on a 15-minute, a 1 hour is adequate. All right, make sense? Now, okay, I don't see any questions. So let me, we're going to jump now to the smaller time frames. This is much more advanced and where context is extremely important, all right, in order to take higher probability trades with the trade scanner. Now, before I do that, let me just show you one thing. I'm going to go to the Trade Scanner Pro settings. I just want to explain these settings real quick, all right? So if you're new to the Trade Scanner Pro, you're going to be using this panel a lot, all right? So, and by the way, Stian is planning to add a really cool feature here where you'll be able to change the speed of the trailing stop. How cool is that? That's not here yet, but it's going to be on this panel soon. So for those of you that are subscribers, you'll have that when I push the update. For those of you who cancel, you're not going to have it. All right, anyway, so you can see this one here. It's pretty obvious. Show previous trade ideas, right? So this shows the old trades on your chart, which is cool because then you can replay them and see how they panned out or see what the price action looked like at the time. Okay, and I'll show you an example of that here in a moment. Oh, Stian says it's implemented, but still have to, okay, so see that? So Stian has it first, of course, because he's the programmer. And then he's going to send it to me, and then I'll be able to push it. But it exists. It's not like he has to work on it. He's worked on it. You see? You guys should be thanking him. Donate some money. All right. So that's the historical trades, right? The heads up, this is heads up. This paints our candles orange as a heads up that a signal is likely to come soon. Okay, so like what orange candles? If you look over here, right, you see these little orange candles? That's what that is. That means a signal is likely to appear. That's why it's called heads up. So on a 15-minute, that means in the next 30 to 45 minutes to an hour, a signal may appear. It gets your attention. But if you're on a 1-minute chart, it means in the next few minutes, a signal is likely to appear. And when I've shown some very aggressive examples where I'll take a trade, I'll start the trade on the heads up so I can get an early start. I've tried that. Sometimes it works great. Other times it doesn't. All right. It's highly risky. It's not something I recommend, but if you're advanced and you're aggressive, that's something to think about. All right. So that's the heads up. Okay. Then we have the trailing stop, which is obvious. You can turn that on and off. Counter trend mode, which will show, like I said before, look, it popped up these counter trend historical trades. Nice trade. Look at that. Nice. I'm going to leave this on here for a moment, right? Counter trend trades, and it turns off the trend trades. So it's either one or the other. It's not going to put both on the chart because I thought that would be very confusing. All right. And then we have show trend, and show trend just basically shows you this information up here. Okay. That controls this up here. So if you want to turn that on and off, that's usually set to on when you first get the script. When you first get the script, all of those settings besides the show trend, they're all off. So you have to turn them on, okay, as you know, as per your preferences. Now, let me show you something here real quick. So this is counter trend mode. Like I said before, it ignores the side of the trend. And obviously when it called this thing, the trend was bullish. Now, it looks great, right? Like, wow, that's an amazing trade. Well, it called one here too, and this one stopped out, okay? But then it called this one, and this one's beautiful. Let's see if it's still playing. Let's replay this real quick, right, using the replay feature on TradingView, and let's see what that looked like at the time. Notice, at the time, the trend was bullish. See that? And let me make this bigger real quick. Okay, that was the wrong button. There we go. So this is counter trend mode, right? At the time, this trend was bullish. Now, as I advance this forward, look at the look. Notice we had what? Orange candles first, okay, at this predetermined level that I drew from the hourly chart. Context. This would be a place to be looking for such a trade. So we get the warning first. Do you see that? The warning. Okay, next. It took some time. The signal appeared here at the close of this candle right here, right? The signal appeared. 69,257. That's the 15-minute signal, right? Now let's see how this thing, it took about 30 minutes for it to reach its take profit. Nice. Okay, now what is this here? 68,512. So let's just measure this real quick. So this profit was worth about 750 points. Not bad for about, 45 minutes there? And the risk on this thing, what was the risk? So 750 points, but the risk was about, what is this? About, let's say, we'll round that to 5, it says 505. So we'll say 500 points. Not bad. Okay, 500 points. You're risking 500 points to make 750. That's roughly 1.5 to 1. Now you can change this, by the way, on this reward ratio. See, it says 1.5. So if you want 2 to 1 suggestions, it will multiply your risk by 2 if you put the number 2 here. In fact, it'll probably change the, it'll change the order. Let's see how it jumped. This is now 2 to 1 reward risk. This is twice the amount that this is over here. Okay, it's twice the amount. That's up to you. It's normally set at 1.5 to 1. You could change it to 1 to 1 if you want. If you really want to just take low expectation trades, it's usually better for like really small time frames, like 30-second or 1-minute charts. Okay. But anyway, so it went straight to its take profit pretty much. There wasn't much pain to deal with there. Now let's go back. Hold on a second. Let me do that again, so we could just see. And then from here we'll see how we can apply context to the smaller time frames. See, so it goes there. Oh, and the trade stops there. Okay, the trade stops there. I guess that's because that's where it is right now. Okay. So you get the idea. And you can see also we have an orange candle developing here. Again, this is a 15-minute chart. This is counter trend mode. Counter trend. Trend is bearish. So this would be producing a long signal in the next hour or two is likely to develop here. Okay. And a long signal might make sense there. Remember, what's our hourly trend? Our hourly trend is bullish. Look, there's a short trade on the hourly that's still in play right now. I'm going to turn counter trend off because we're interested in trend. Do you see where that's confusing? The bigger picture is really the trend that you're playing on the smaller picture when you're using counter trend mode. You're trying to align with the bigger picture when you're in counter trend mode for the smaller picture. Does that make sense? That may sound confusing, but our bigger picture here is bullish and our smaller picture is aligning for a bullish trade, the 15-minute. Which, I mean, this is a minor level like I talked about before. It sort of makes sense here, but this level is not going to be as attractive as this level, okay? So this level, if you're going to assign a probability to it, I'd give it a lower probability, like maybe just over 50%, where this level, I'd give a much higher probability, maybe 60, maybe 70% chance, maybe a little higher of this thing turning green and offering a profit opportunity. It may not go straight to the take profit, but at least some green. Does that make sense? Okay, let's move on now. So I hope I'm not confusing people. Let's now go to our double charts. Okay, let me go back there to our double charts. And let's now go to the smaller time frame. So if I'm going to switch to a 1 minute, okay, which is, tough time frame, what am I going to use for my multi-time frame context? Anyone want to guess? What do you think I should use for my 1 minute now? Now, because again, 1 minute is now a much smaller magnitude. So I don't need to use an hourly chart. I don't need to use a 4-hour chart. Those levels are relevant, but we may not see one of those levels for a long time. So what can I do? Anyone want to guess? Come on, this is the interactive portion of the session here. Anyone want to guess? What time frame should I use? Steve, try to let other people answer. Monica, 15-minute. Good answer. Yes, 15-minute is appropriate. In fact, a rule that I like to use is if I'm working with 15-minute or below, or basically anything below 15-minute or below 5-minute, 15-minute or 30-minute could be the reference point. Okay? Anything above, like if I'm using a 15-minute, then I should be looking at the hourly or 4-hour. Does that make sense? Put that in your notes, right? Anything lower, let's just say 5-minute and below, you should be using a 15-minute. Anything above 15-minute, you should be using hourly, 30-minute, hourly, or 4-hour for your point of reference. Now, so I'm on a 15-minute over here. These levels are still relevant from my larger time frame. They're still relevant. The problem is we're nowhere near them. So the question is, can I find other levels, maybe more minor levels, that would make sense for a small time frame trade? And the answer is yes. Look, I'm doing the same thing that I was doing before. I'm looking for inflection points, okay? An inflection point where there's some kind of reaction. This is a pretty decent reaction, pulled back decently off of that. And then it went to the level again and pulled back again. Okay, so that's an old resistance. And now it's acting as a support. So that tells me that, okay, I can consider longs in this area. I'm not going to be looking for shorts here. I should be looking for longs. It's a support level, right? So with that, I'm now going to my 1 minute chart. And I'm like, okay, so we have a level in this area. That's what this blue line represents here. Okay, I have a level and I want a signal. Okay, now at this moment, there's no signal. The thing is, notice, this is bearish. Trend is bearish. How do I get long signals here? Anyone want to guess? You guys should know this because you guys should be applying this. How do I get long signals? Anyone want to tell me? I need long signals here. I mean, if I want to try to go with this trend, okay, I can go with short signals, but this is my location. The location is key. This is context. This is not exactly an attractive place for short signals on such a small time frame. Counter trend. Yes, you guys are correct. Counter trend. So I go to counter trend mode. So for those of you that are new, right, counter trend mode, you're going to be flipping this back and forth. And look, there's a trade in play. I missed it. Can't do anything with this now. But look at this. I want to point out, look how many times it tried. This is a failed trade right here. This is a failed trade right here. Here's another failed trade over here. Okay, that's 3. And then the 4th one goes. Look at that. Okay. So keep that in mind. Like if you're getting these failed trades, don't just keep, these failed trades, where were they though? Like could the context have helped us? This failed trade was up here. It was up here. Okay. Is up there the same as here? Is up here the same? No, it's not. So taking that would be more aggressive. Maybe it could have worked, but you should be expecting it more likely not to work. Does that make sense? So this is all about expectations, because up here is not here. This is the level. Okay. You could say, oh, what about this over here? There's some action. Okay. Yeah, there's a little action over here, but there's nothing dramatic here. This is not dramatic. This is dramatic. I mean, look how much it sold off. I mean, let's just measure it. This sold off 1,000 points. This sold off 400 points. Obviously, 1,000 is more dramatic, right? So that's going to be much more relevant. Does that make sense? So these signals that went off here, especially like this one's like in the middle of nowhere, right? Or that is with that the one, this one up here. Look at this one. Like, well, that's like, shouldn't even be thinking about that. Okay. Does that make sense? So we have our context. Once we have our context, we really don't need to look at this chart anymore, right? You don't need to have 2 charts up at the same time. Less is more in this game. So you want to focus on one, right? Once we have our context and you draw your levels on the chart, it's like, okay, now I'm waiting. And this one's in play. This one's about to reach the take profit. Man, this would have been nice to take as a paper trade. This would have been a great example. All right, so now it's going up there, and, what am I going to do? I'm not going to take this now. Look at the trailing stop. The trailing stop is almost at break even. So you realize that this trade here is now it's at break even. See that? The trailing stop is basically at break even. This is now a risk-free trade. That is the beauty of the trade scanner. You went from this risk here to no risk. This is all profit. If you don't take money off the table now, which would be a good idea, you're at the take profit, you should take something off the table, right? If you have 2 contracts, you take one off here, and then you try to ride the second one and see how far it goes, okay? The trade, if the trade turns on you right away, like it can do it, right? If the trade does this, market does this, it can do it. Some news comes out, and it does this in the next minute. You respect the level, you get out, and you lose nothing. And if you think, whoa, I lost all this profit, that's not your money. Okay? If you think that way, losing profit is losing, you're going to have a hard time in this game. Okay? Your account doesn't shrink if you lose profit. Your account shrinks when you lose this part over here. This is the capital at risk here, not the profit. Okay? The profit is a gift from the market. That's not your money until you close the position. When you close it and then you lose it after that, then you lose the money. But if it's open, it's not yours. Okay? Cool. Any questions? Hey, Howard, any questions? Good answers, you guys. So you guys seem to be pretty much on the same page. I would like to take a trade, but I'm not going to, there's nothing for me to do here. I'm not going to do anything with this. Right? We're at to take profit. Now, if I want to be aggressive, all right, remember, we're in counter trend mode. It says it right here, counter trend mode. Okay? Which means I was looking for longs in a bearish trend. But this is a bearish trend on a 1 minute. A bear trend on a 1 minute is not exactly the most heavyweight. You know what I mean? It's not the most reliable. The trend should come from a larger time frame. In this case, the 15-minute, okay, or the hourly. Now, we're pushing up to like some level here. Okay, let's see whatever. One thing I wanted to mention real quick, and Giovanni has asked this question, and I think this would be a good time to answer it again, is if you notice over here, right, in this box, it says conflict. See that? So what conflict means is when you get price action like this that goes against the trend of the time frame, it will say conflict. All right. It means that this price action is going against what the trend is on the time frame, and it's possible that the trend may be in transition. That's what conflict means. So it's not something that you trade on. It's just sort of a heads up, like, if you get too much conflict, maybe you should step aside. Okay, because the trend may be changing. So that's why I had Steve put that in there to kind of give us an idea, because there's plenty of times where the market will do something like this. It'll trend to a point, and then you get some ridiculous move that basically gives the whole move back, and you're like, what is going on here? The trend doesn't continue. It just completely reverses, and that's what conflict was meant to help you get a handle around. Okay? So here's what I'm going to do. I'm going to take counter trend off because we're going to get a trend trade here, right? We're at this minor resistance. I'm getting warnings. See that? I'm getting warnings. Our counter trend trade went to a take profit. So I'm going to bet on this smaller time frame just so I can show you. Now, again, just so you know, if we get a signal here, I'm going against the bigger picture trend, right? Remember, location, right? Location is key. If I'm going to look for a short, I'm shorting around here. Okay, at least I'm not shorting the bottom, but I'm shorting around here. This is not exactly an ideal place. Ideal place for shorts are up here. This is where the probability is going to be most favorable. But I'm dealing with a 1 minute, right? So if I want to stretch it a bit and be aggressive, okay, I'll try using this minor resistance here, but it's going to be tricky. It may not work. It's not a good probability. So if this was real money, I probably would just ignore it completely. But I want to show an example. Okay, so this is a better point to short than this point. If I'm going to take a day trade, a quick 1 minute trade, which is maybe like 100 points or something. Okay, so look, it's starting to develop. There's no signal there yet, but I have some warning, right? Let's turn this off. Oh, wrong chart. Let's turn this off. Let's put this one on. Okay, we want to focus on this. Now, I'm going to take one short. I'm going to start one early. This is usually what gets me into trouble. Oh, look, there's a signal. All right, just as I put it on. So I'm going to put the second one on. All right, now, again, I'm showing you an example that's a low probability. There's a low chance that this is going to work. Okay, but I want to show you an example. This is a trade with the trend, but I want you to understand it's a low probability, even though it's a trade with the trend. Why? I want you guys to answer that. Why is this a low probability trade? Because if you're in this situation yourself, I don't want you to sit there and be like, oh, this thing, I'm gonna be a billionaire now. Order my Ferrari. Why is this a low probability? I'm not making fun of you guys, by the way. That's just my, that's my mindless trader impression. General mindless trader. All right. Why is this a low probability trade? It looks nice right now, but it's still low probability. Why? Right? It looks nice until it's up here. Then it's not going to look nice anymore. Why is this low probability? All right, Steen, you can answer this question if you want. You guys don't know? Have I been talking to myself for 30 minutes? You could say I don't know. Location, Howard says. It's low probability. Well, right, because it's even though the trend is bearish here, and I took a bearish trade on the side of the trend, the bigger picture trend is not bearish. Not the conflict. Isaac, you got it. The bigger trend, I'm going against it. That's context. You see, that's not apparent here. That's not clear because in order for that to be clear, I have to do this. I have to look this up. And you will say, well, bigger picture trend, it looks pretty bullish. Well, yeah, except we have a support like right here. And yes, this momentum is bearish. This may work for me, but this is low probability because we bounced off this support and we have a lot of room to work its way up into this area at least. So it's low probability because I'm fighting the bigger picture. That's the answer. Okay. So, I mean, look, it's giving me a hard time. All right. What I'm hoping for here is that maybe we test like this low or maybe halfway. We don't have to go this low. That's not what I'm looking for. If we could just go halfway, like maybe into this area right here, I'll be happy to start getting out. I only have 2 contracts on, but as you can see, this thing is not exactly like it was working there for a bit, and then it gave me this green candle. This green candle is not what I should be seeing if this thing is bearish. I should get continuation red, right? I should be seeing this type of price action, like red, big red candles, not this green nonsense. What is this? Why are people buying here? Okay, that right there is a sign of, that hesitation is problematic. Now, this trade isn't against me yet, but this can go against me very quickly. So I want to show you this example because I want you to understand what your thought process should be when you find yourself in this situation. Don't take these trades blindly, right? Like this could be an example of a blind trade, sort of, right? A better level would have been up here to get short, but I took the earlier signal because I want to show an example, okay? This could be the situation where you took some random trade and then you're like, oh man, wait a minute, look at my location. So make sure your expectations are in line. I'm not expecting much from this. So let's see, I may take some money off the table here. I think I'm going to take one off. Because you know what, that's a good, again, the market has given me a gift. I'm not exactly, on the most favorable side. Look at the trailing stop. I'm getting out of one. I covered one. I just don't like this hesitation, right? So I took one off the table, right? Locked in one at 416, 68, 416. You see how it's giving it back? See that? See this nonsense? This is not something that's bearish. I should not see this. But I know because I took a trade that's not exactly favorable. Okay, we're going back to the entry point. I may just get out. Let's see how this thing closes. If this thing closes green, I want to see how the next candle begins. How time is it? I mean, I got like 40 seconds. 20 seconds. 20 seconds, this thing could be up here. So if the next candle opens and starts inching up, I'm just gonna get out. Because again, I took a trade that's low probability. So you see what I'm doing? See how conservative I am with it? I'm just waiting for this stupid candle to close. Okay, got the close right here. Let's see if we get the pop through. Do we pop through here? I'm just going to get out. Or do we turn red? Do we go back into the red? If we go back into the red, I'll try to give it a chance. No, see, popping through. Goodbye. All right, so let me see. How much? Let's go to my account history. So I made $67 on that first exit, and I lost $1.29 on the second exit. You see, so I saved that trade. It was a profitable trade. I gave the market a chance to pull back, but I knew I was going into something that wasn't favorable, right? I told you that right from the start. So when you're in those situations, I think a lot of beginners make this mistake with the trade scanner. They see a trade and they're like, hey, this thing's going to go all the way over here. And they don't realize that this is the picture you're playing. Okay. This is the picture we're playing, which is the multi-time frame context. Now, does that all fit together? Okay, so we got this turn. Now, since I'm interested in longs in general, we're still not at a long location. We're just not there. This is kind of in the middle of nowhere. So let this trade go away. I'm going to turn counter trend mode back on. Is that trade may still be open, actually. Let's see. Is it? No, it's not. Okay. So this trade is closed, right? So it'd be nice if another long developed. And I would try to give that long more of a chance since that's what the location favors a little bit more. Okay. So I know I went over a lot of stuff here and it may be confusing. I've been at this an hour now. Any questions? There's a counter trend trade on the 3-minute open, Samuel says. Okay. On the 3-minute, let's take a look. So you could jump time frames. Oh, nice. Oh, look at that. Oh, this thing's on its way. This thing was called over here. Look at that. Beautiful. See, something like this, if aggressively, I would be interested if it retested the entry price. A lot of times it will. Okay. I mean, something like this with a green candle like this, you could jump into this because it's got some potential. You realize you're taking some more risk. Your risk is you really should be using this trailing stop. So your risk right now, if you take this right now, this is your risk. Okay. Which is what? 300 points is your risk right now. If you took that and you're looking at profit potential of 270, not exactly the best reward risk. So in that situation, you'd have to hope that this thing can push further to justify your risk, right? Or the trailing stop gets tighter. Okay, makes sense? So I haven't really talked about, you shouldn't jump around. You should pick a time frame and stick to it as a beginner. You know, if you want to do a 5 minute, you want to do a 3 minute. Sometimes you'll see the same trade, like a 5 minute and 3 minute will have the same trade, similar trades going on at the same time. Okay. Don't be confused by that. You stick to one time frame and get comfortable with one time frame. If you're going to use multi-time frame, you use it for context. Okay, good. Thanks for pointing that out, Sam. This is beautiful. Look at that. Nice. Okay, so, and as you see, I took the short. I took this short and I went in with the correct expectation. I was taking something low probability. You see that? Good thing I stuck to that idea because this would have been a complete stop out like I do on my other streams. All right, so that's called being flexible, having an open mind, and being nimble. Like things change fast. So if you sit there and you get parked, you get stuck in that idea. Oh, it's a short. The trend says bearish, and no, it's against me. The bigger picture is what's in play, right? The smaller picture is just kind of weaving in and out of what the bigger picture is asserting. Now, I bet you if I look at like a 15-second chart, I'll find a long signal like over here. I don't recommend these for beginners especially. Let's see. Is there one there? Look, there was a long over here on a 15-second chart. 15 seconds. Okay. So again, you pick a time frame. This is back to the 1 minute. You pick a time frame, work with that time frame. You're not always going to be stuck on that time frame. You just have to get some experience. And then over time, you can jump time frames. In fact, we're going to make a tool to help you do just that. All right, like I explained, we're going to do a table where you can see, you plug in what markets you want to watch and the time frames that you want to watch them on, and it will tell you what's happening on all the time frames. So you don't have to jump around. It'll tell you. And then you could just go to the chart, okay, or set a notification. Oh, you have a trade on. Cool. Cool. I've been getting some good feedback. I had a guy that just signed on today, and he's like, I made money. I'm like, dude, I hope you're on paper. He's like, no. I'm like, dude, paper trade. All right, I'm going to turn this off. So paper trade, same year experience. I don't have to tell you that. But if you're new and you're on the free trial, paper trade for at least a week. Just have some patience. Paper trade. Get a feel for the system. Because again, if you blindly follow the signals, you're going to make money randomly and you're going to think you're all big and bad. And then you're going to get caught in noise and you're going to give it all back. I don't want you to do that. Paper trade, and use this lesson of context, multi-time frame context, to help you pick your levels, or at least prepare, anticipate for this type of behavior, because you know the level in advance, what should happen there. And then the Trade Scanner Pro will confirm it or not. Sometimes it may confirm and then it may stop. The first one may stop out and then you get a second signal there again in the same area. Those are usually higher probability when you get like those double signals. It kind of looks like this, where you get one and then another one, or like, look at this, right? One and then followed by another one. But it's not that two appear that makes it highly probable. It's the location where two appear. Again, to reiterate the location. That's why these two are more probable than these two. All right. So again, your goal, to sum this up, your goal is to put a probability on a level and say, okay, here's a support. broader trend is bullish. This is a support in a bullish trend. Chances are the support will hold. I would like a signal at this level. Okay. But that's going to be affected by what time frame you trade on. 1 minute, it may take for a very long time for the market to get to that level, right? So if you want action from more advanced traders, you find minor levels and then you can work with that. Like I was just trying to show you here. Okay. This is actually a minor level on the bigger picture. And this short that I took, this short over here was a very minor level. This was even more minor, as I pointed out earlier. This is even more minor and a lower probability. Good thing I got out. Okay, and that I came out green. I came out ahead on that trade. Not by much, but still I came out ahead. That could have been a complete stop out. That's what puts you ahead. That's what helps you accumulate your capital over time, right? And this is all about expectations. My expectations were low on that short. I made my decisions in line with that. It's all about how you make the decisions. This is a mental game more than anything else. All right, any questions? All right, I'm going to wrap this up here in a minute or so. I've been at this over an hour. So this session here, again, is good for beginners. You can go back and replay this if you're a TradeScanner Pro member. I mean, I'll probably leave this one up on YouTube so you can watch it, whatever, at your convenience. But in the future, only TradeScanner Pro members will be able to go back and watch these again. Okay, that's how it's going to work. All right, any questions? So if you want to sign up for TradeScanner Pro, let me put the link here real quick. The link is in the description. Okay, hold on. So you can go to this link. Make sure I spell it right because I can't see anything. That's the link. I put it in the chat. I'm going to show it on the screen. Okay. TSCPRO. Yes. Go to that link. That'll take you to this page right here. All right. The TradeScanner Pro page. It explains how it works. Tells you a little bit about me. And it takes you over here to this. Okay. 14-day free trial. If you pay for the yearly, it's $22.50 a month. If you pay monthly, it's $30. These are introductory prices. They're going to go higher. So for those of you that have locked this in, you guys are smart. Okay. For those of you that hesitate, and I don't know what to tell you. And if $30 a month is too much for you, you should probably not be in this game. Just being honest with you. Click on this right over here. It takes you to a form, a page, right? Like this page right here. It says, make sure to include your username for TradingView. You will put that in over here. All right. Make sure you do that. And make sure you put in your username, not an email, your TradingView username. Okay, you put that in over here, and then I can send you an invite. Right now, it's still manual, so it'll take takes a few hours for me. So please allow me a few hours to get you in the system. Okay, if you sign up for that. All right, cool. So I'm going to leave you guys with that. Any other questions? So nice job, you guys. Great answers. I hope you got something valuable out of this session. I want you guys to do well with the TradeScanner Pro. That is why I developed that, because I want to be able to provide tools that provide real value, not this garbage that's put in front of you all day long. This game is a hard game, and most of the stuff that we consume in this game is useless. This tool was put together to help you basically manage your decisions, minimize confusion, and reduce your learning curve, right? You have order points, you have references to look at, you have things, and when you combine that with context, which doesn't take long to learn, you now have a much better chance at coming out ahead in this game. All right, and that's the best we can do. All right. So other than that, you guys, thank you for watching. You can always find me if you have questions. You can find me over at, in the Discord community. You could send me a message. TradingView, you could send me a message on there, or you could send me an email at mark@markmemarkets. Okay. So everyone, thank you for watching. Enjoy the rest of your day, the rest of your evening, wherever you are in the world. And thank you. Thank you again for watching.